Hello everyone. Today we're going to go into our first chapter, which is Introduction to Accounting. So most of you will probably be new to this since it is not your core subject. So let us get into it. Why do we need to have accounting knowledge? So most of you probably know that accounting is related to finance or basically money. So why do we need to have knowledge regarding money? So money is used in our daily life. You use it to buy things or to pay things. Gaining an gaining an item that you will own or pay a debt. So accounting knowledge help you to manage those money so that you can invest them in a better place. Simply said, you will be able to spend it more wisely. Another purpose of money management or accounting knowledge is to prevent one from getting fraud or getting cheated on by people, scam basically. So through this knowledge you will be able to detect those hints like that. So among the reasons you learn accounting knowledge is to prevent this kind of stuff, like akaun bekas kerana akaun tidak mengaku salah ini tidak berpecah amanah. So you learn those accounting knowledge to prevent this kind of stuff, to prevent your money to be taken. Look at this this slide. It also talk about irresponsibility of people taking monies of others. So through accounting knowledge, you'll be able to learn to detect this behavior among of the reasons accounting is taught. So another article relating stealing of money by assistant accountant, a clerk accountant. Okay, so this is our learning outcome. Through introduction of accounting, you'll be able to explain the definition, function, objective, and uses of financial statement, identify different groups of users and their use of financial statement, explain the various type of business organization, and differentiate between accounting and bookkeeping. So this is our content for this chapter. So you'll be able to know all of this by the end of this chapter. Okay, definition of accounting. The art of classifying, recording, and summarizing transaction and business event in a monetary term and interpreting the result to interested parties to enable them to make decisions. So in accounting, firstly, you will classify the transaction, meaning if the transaction is a buying transaction, will be under It will be categorized under a buying. If you sell the item, it will be in another category, which is selling. So after you classify, you will be recording those transactions in a journal entry. After that, you'll be summarizing those transactions that was recorded in a statement, so that you will see all the transaction and what does it represent, what does the information it give through that transaction, and then you will interpret the information you get that was summarized in the statement, in the financial statement, to interested parties such as shareholders, bank, for them to use to make decision. So accounting is basically helping users that is interested in the information to make decision. Okay, next is the objective. Next is the objective of financial statement. So it's to provide financial information about an organization that is useful to various users in decision making, to help users assess the future prospect of a business organization. Okay, just as through the definition of accounting, you will be able to produce a financial statement after doing all the accounting process, which is to classify, to record, and summarize. Lastly, through the financial statement, you'll be able to interpret financial information about an organization. So you can also use those information for future prospect, which is uh, to predict what does the company might bring in the future. It's not a fact, but you just predict. Through the financial statement, it might convince you more whether the company will be profitable next year or have losses next year. Purpose of accounting information. So just as I stated before, you can know the financial status of the organization, which is after you finish the accounting process, you can know whether the organization uh, will have a profit will lose for the period. Second is for easy preference. For easy reference, as humans have limitation in memorizing large information. And so, since human has their own limits, doing the accounting process and having those information helps to reduce some burdens, and also to avoid misleading financial statement if there are no proper records. So we also can prevent misleading information if the financial statement is done. Okay, next is bookkeeping with accounting. So what are the difference? So accounting process involve 4 of these steps, while bookkeeping just involves 3, which is classifying, recording, and summarize. The difference between bookkeeping and accounting is that accounting is interpreting the information that was gained through these 3 process, which is bookkeeping, and interpret it to use for decision making, while bookkeeping is just a process of gaining that information without interpreting it. Okay, so bookkeeping is involved in the accounting process. So next we go to the accounting cycle. So this is the accounting cycle. You will start with source document. So what is a source document? Source document is the document used as proof to acknowledge the transaction exists. For example, like if you buy a water, you will have a receipt. So those receipts are the source document. It's a proof that the buying transaction exists. So through the source document, you'll be able to produce a journal entry. The journal entry to record the buying process. After you finish the entry, you will put the journal entry into a ledger to differentiate it into specific categories, which is like before buying or selling, like that. After you finish classifying it in the ledger, you will put it in a trial balance, which is the comparison of the total amount of each category. After you finish, after you've done with the trial balance, you will put it in the financial statement, which is the final process in accounting cycle to be used for the interpretation of information that users can use to make decisions. So the next subtopic is learning about types of business organization. So there are three types, which is the first one is sole proprietorship, milikan tunggal, partnership is perkongsian, limited company is syarikat lah. Okay, so kita masuk first kali is sole proprietorship. Okay, sole proprietorship, you have to register under Business Registration Act 1957. So the capital is contributed by the owner. Since it's a sole proprietorship, which is milikan tunggal, so duit itu akan dimasuk oleh pemiliknya lah. So usually it's just one person, ownership owned by one person. So that one person will be the main contributor to the business, since it's his business. So manage and control will be controlled and managed by the owner, the one that contribute the money to the business. So he will manage and decide for the business. Liability, hutang, will be unlimited liability. So unlimited liability means if the company fails, which means goes bankrupt, the payable, which means if he has debt to the bank and he's not able to pay the bank with the business money, the bank has the right to take his personal stuff, whether it's related to the business or not. So that's what it means, unlimited. The owner's item might be taken if the owner is unable to pay his debt. Profit or loss. Profit will belong 100% to the owner. Since he gives the money, he also manages them, so the profit will go to the owner. Vice versa, If there is a losses, rugi, the owner will bear the loss on his own. So he will get 100% the profit and also 100% if there is a loss. Book an account. There's no obligation for them to make an account or a book record. Since it's his business, there's no other users that will be interested in looking at the history of his financial report. And he also has no obligation to show them, as he will gain everything and lose everything. Second is partnership. So partnership is registered under Business Registration Act 1956 and 1957. The capital is contributed by partners by through agreement. So capital is modal. Kalau partnership tu dua orang, contoh, diorang dah berjanji nak contribute modal itu 50%, 50% antara dua orang tu. So itu adalah modal bisnes lah. Dia akan bagi half-half antara dua partnership. So the ownership starts to 20 partners, and professional partnership can go up to 50 partners. Manage and control will be by the partners. Of course, by the partners, since it's their business. So any decision, they has to consult each other first before making the final decision. So next is liability, which is debt. They have two types, which is limited liability and unlimited. So as I explained before, unlimited is if they have a debt, the payable, example a bank, will be able to take their belongings if they aren't able to pay their debt. While limited, the payable, let's say the bank, won't be able to take the partner's belonging. So that's why it's limited. Limited only to the business item, even though they aren't able to pay the debt. The bank won't be able to take the the partner's personal belonging. Okay. Next is profit or loss, which is shared by the partnership. PA means partnership agreement. So if they agree to distribute the profit or loss among them according to percentage, they will gain that profit or loss at each period, except if they change the agreement depending on the partnership. Lastly is book and account. No legal obligation. They also don't have any legal obligation to show their financial records, since they are the main contributor, and the profit or loss will go to them. They won't go to anyone else. Thus, nobody has to know the partnership's business performance. Lastly is limited companies, which is just the usual company that you know, registered under CCM by the Company Act 2016, highlighting if you're using the old book, Company Act has changed. Okay, it's changed to Act 2016. So this is the new Act. Capital will be contributed by shareholders, also known as the owners of the company. since they produce the capital to purchase through the purchase of shares. So ownership will be, if the company is a private company, Sendirian Berhad, it will be 1 until 50 shareholders. Usually it's among family members. Since Sendirian Berhad is not an open company, it's very private. So usually the shares are bought through close relative or family members. While public companies, Berhad, they are with a minimum of 1 shareholder. This is under the new act. Previously was minimum 2 shareholders. Max depend on the number of the agreement. So public companies are companies that are registered under Bursa. So they are large company, usually very large company that produce very high profits every year. Since they have large numbers of capital contributor, so usually they have large profit every year. So managed and control, they are managed and controlled by board of directors, which are the shareholders that are appointed by the company to manage the business performance. Liability is limited liability, which is only limited to the business properties. It won't disturb the owners, which is the shareholder property. Profit or loss, they are paid to the shareholders in form of dividend. Since the shareholders are the one that contribute the capital, so they are the one that will gain the profit or loss. Book and account. They are for book and account, company must be kept and sent to CCM. Companies Commission of Malaysia. So for company, you have to do the accounting process because the shareholders needs to know the business performance. Since they aren't the one that manage or control the company, they have to know the information each year. They need to know where the capital, where their money goes to and what does it gain. Okay, the final topic of this chapter is uses of financial statement. Internal uses. Okay, so internal uses. What does it mean by internal uses? So internal users are those that works in an organization, that works in the businesses. This applies to a company, since they are the only one that does accounting process to produce a financial statement. So internal users are the owner, aka the shareholders. They are interested in the profit earned from their investment, the money that they contribute, and the company's financial stability and growth of their business. So they have to know where their money goes. That's the internal users. Next is managers, which is the people that works in the company. Need information as guidance in financial or in planning, organization and controlling the organization, and analyze the operation of the business. So the manager will use the financial statement information as a decision making to operate the company to bring in more profit and for growth. Lastly is employees. will be interested in the business ability to progress and expand. They look for a steady employment, earning capacity, and other monetary benefit. So usually employees are interested in the financial statement because they need to know whether during the year will they gain bonuses. So they need to know if the company's profit will they gain their bonus. Okay, lastly is external users. What is an external users? External users are those who are indirectly involved with the organization. Indirectly meaning they aren't in the business. Maksudnya orang luar yang tak ada kaitan dengan business tu. For example, creditors or bankers. Interested to know the ability of the business in repaying the amount owing to them. So when an organization does business, they will tend to take loan. So when they take loan, they have to do business with bankers. So bank will ask for the financial statement to know whether the business is stable enough to pay the debt. Next, current and potential investor require information regarding the solvency and financial strength of the business. It present present and future earning capacity and ability of the management. So potential meaning not a shareholder yet, but might buy some if the financial statement shows that the company is stable enough to produce dividend. The third one is government. So interested in the financial statement and reports of a business for tax purpose. So for government, they are only interested in the business tax payment. Lastly is consumer. Interested in the establishment of good accounting control as mean of reduction of the price of the good. Consumer is buyers of the product. They are interested in the financial statement to know whether the price of the goods will reduce so that they can pay less. So that is the end of our class today. For this, we just finished chapter 1. Thank you.